Hello and good morning, listeners. This is Almus Market Mornings with Shikhar Garg, and here's the bit of updates for today. German IFO numbers came better than expected. Can we say it was one of the reasons for Euro to rally, JK? That's one bit I'd like to know from you. And also, in the observation should be oil. Europe saw a decline in oil shipments since Russia-Ukraine issue began, but now these reductions have started to hit harder as the supply from Iraq via Turkey has halted, and even the OPEC has announced that they'll be going ahead with supply curbs from the next month onwards. Now, this is going to hit a lot many supplies of oil over the period of time, but on the other hand, what we are seeing is the credit growth numbers, which were released yesterday for India, have started to show some moderation. So there's been a mixed bag of macro updates which we can see over the period. JK, what's your thought on these particular developments?
Yeah, good morning, Shikhar. I think let's start with the euro, which you were talking about. Yes, IFO numbers were good. IFO numbers were actually better than last month, but slightly below expectations of this month. So it was 93.6 versus 94 expected. But it's still a good number. Overall trend on the German economy is good, and it shows that they could, after all, avoid a recession. But definitely, the day belonged to euro that made further straits against most other currencies and modestly against the USD, though it significantly it has broken the resistance at 1.1030 also. Trigger has come from higher bund yields, contrasting with the subdued US Treasury yields after ECB members made quite hawkish statements pointing to sticky core inflation. And Schnabel, in fact, did not rule out a 0.5% hike in the next ECB meeting. Mr. Wilra expressed similar view, although he said further hike should be limited in number and in size. So the generous pay rises in German public sector also can further complicate ECB's fight against inflation. Now, why we are focusing on the euro rise is that eventually euro becomes a bellwether of all the currencies, and when it is in an uptrend, it also means that the other currencies follow it, and then general dollar weakness will be seen as well. So just to give you a perspective, in March 2014, 10-year German yields were at 1.68% and euro was at 1.40. It was also the time Eurozone economy had started to slip and faced the financial crisis. But currently, the Eurozone economy looks good on a recovery path and stable. So on several parameters, euro at 1.10 looks undervalued on historical perspective, though it looks overbought on short-term basis. Of course, the Russia-Ukraine war still poses uncertainty, and energy security for the region is also quite uncertain. Technically, near-term target at 1.12, where the 200-week moving average lies, and that can pose good resistance for more gains. UK data and BOE officials are not far behind ECB in pushing for further inflation fight and a rate hike. Mr. Ramsden, a member of Bank of England, said that inflation is a bigger risk than over tightening. Now you contrast this with the Japanese currency, where the new Japanese governor set a high benchmark for any change in the monetary policy towards tightness. So the market is almost giving up that there will be any change in the meeting that's coming up this week, but possibly a hint of how things can move in the coming months is how what we are speculating about. Now, on the US side, not much of a data to focus on, but the probabilities of a hike of 25 basis points in May have risen further to 92%. That's almost a certainty on the rate rise. Yields moved slightly lower yesterday, and contrasting with the yields in German market. Again, stock markets were directionless, taking more cues from individual corporate numbers than on the macroeconomy. Macroeconomy will have clues from US GDP data on Thursday, and also the PCE core inflation on Friday. This core inflation number is coming just ahead of the FOMC meet on May 2nd and 3rd, so that will probably have a good influence on what Powell says for monetary policy going forward. So relatively lull period now, and I think the activity should be really picking up towards later part of this week. Also on the rupee, surprisingly, there was some movement, compared to the tight ranges that we had seen for quite a number of days recently. The rupee dollar, rather dollar rupee, came down to below 81.90 momentarily, but that's a support zone of 81, 80, 90, and only a failure to hold it can drag it down to 81.50 or somewhat lower. At least we are uh, till we are done with the US data later this week and then the FOMC decision next week, this range or this support should hold for the USD INR. So we should think 81.80, 82.30 should hold. It's also notable that other Asian currencies are still trading weaker, and the rupee has somewhat stood out with its performance, but market is blaming it on, or rather putting it down to some IPO related inflows. And so once the flows are over, probably we'll go back above 82. Meanwhile, interestingly, Indian bond yields for 10-year benchmark hit a 8-month low of 7.10 as market has started to price in a prolonged pause by RBI on the policy. Expectation of higher demand for securities where investors are only modestly positioned can add further pressure on the yields to the downside. The recently released MPC minutes, where members continue to expect further moderation in core inflation, only added to the trend. So next immediate target for the 10-year bond yield comes at 7%, while a break can target as low as 6.8% if it is supported by further good news on inflation. Thank you.
Okay, JK, that was quite good. And yes, folks, we saw some good rally in euro against the dollar. And as JK mentioned, primary trigger was from the higher bond yields. Now, that's one bit, but there's also a concerning area for eurozone, as ECB has found it tricky to fight against the inflation with the pace slash wage rise also coming in the fore. That's with respect to euro, but as DK mentioned, it's in the short term on the overbought side, and possibly show some sort of corrections from the initial target zone, as mentioned by JK. But talking about other nations, BOJ has continued to hint of not having much change when it comes to their policy this Friday. But Friday is also going to give another round of macro numbers for US, primarily the PCE core inflation data, which is coming right before FOMC, and we can see some bit of actions from the FOMC meeting as well. So directions are awaited on the markets. Action for the coming days, and that is going to probably set further action in the USD INR as well, because currently with the lack of significant data, we can expect USD INR to continue staying in the range, as JK mentioned, between 81.70 and 82.30 on the higher side. That's it for today, folks. Even though USD INR is outperforming the Asians, but the ranged action shall continue. So we'll come back again with another round of updates, as we do not expect much action in the currency. Thank you so much for listening.